Good day, everybody. It's your guy here, the unknown. Today, I want us to share something very, very important. Okay, I believe there's still people who believe trading is difficult, and in reality, trading is not as difficult as you think. Neither is it as easy as portrayed on social media. Okay, it's not a get rich quick kind of thing. Okay, but trading is not meant to be hard. It's not supposed to be hard. Yes, the beginning will be hard, but it's mostly one thing: rinse and repeat. Trade the same thing each and every day. However, yes, when you are learning, you're gonna go through a lot of pressure and a lot of drawdowns and a lot of stress. Okay, I'll explain this in a minute, but today I just want to give you a whole strategy that is clean, that will actually help you get started, and you will see big profits because I'm sharing with you something that is working for me. Okay, I'm sharing with you something that is working for me. So this video is going to be a little bit longer because I am sharing with you the whole strategy. Okay, it's not a video whereby I'm saying, okay, these are trend lines or this is which indicator. No, it's a video whereby I'm showing you a whole strategy from the beginning to the end. Just go and replicate what I'm gonna show you today. Okay, take everything, go and practice it as it is, and start applying it today. I've done all the work for you. Okay, all you have to do is to understand this, go and replicate it. Okay, so without any further ado, let's jump into it. Okay, guys, right now it's time to address the big elephant in the room. Why is it that trading is difficult for many people, or why is it that 90 to 95% of traders are failing? Of course, we have a statistic that says 90 to 95% of retail guys are losing. And retail traders are people who are trading from their own homes. Okay, they are not professional traders. They have limited capitals and limited access to tools and information. Okay, so the main reason as to why many traders are actually failing, or why many traders find it very difficult to become profitable, firstly, it's the nature of the business. Okay, the nature of the business. This is a kind of business that is actually sloped like this. It starts by going down before it starts by going up. Okay, so everybody faces this period right here. This is a period whereby you go through pain, you go through failure, you work maybe 16 hours a day, you are putting in a lot of work, but there is just no results. And everybody goes through this stage. Okay, you are reading a lot, you are buying courses, maybe you are doing online courses, could be free or bought courses, but there is no results. It seems like nothing is changing. Okay, it seems like it's not for you. It seems like you'll never make it in the industry. Okay, so everybody goes through this phase right here. I would rather call it a phase. Okay, because after this phase then comes the real profitable days or profitable period, and this one runs forever. Okay, so you must go through this one. Everybody goes through this one. Unfortunately, on social media, trading is portrayed as a get rich quick kind of thing, which it is not. Okay, but for those who have mentors, obviously they will go through this. However, it's going to be very short until they start seeing the results. Why? Because your mentor is going to hold your hand, your mentor is going to hold you accountable whenever you make a mistake. So that's something you have to know. But everybody will go through this period of headache, feeling like you are giving up, feeling like this is a scam, feeling like this is not for you, are not meant to be in here, like your broker is after your stops, whatsoever. Okay, and the second reason is the most fascinating one. Okay, because now the second reason is the noise. There is a lot of noise out there. There are thousands, if not hundreds of thousands of strategies, and most people are getting caught in the middle. So if you ever find yourself trying to learn the strategy this week, next week you are watching somebody who's talking about another strategy and you are trying to follow it, and then the following month somebody comes with another strategy, you want to follow that one, and your friend comes with this strategy and you want to follow this one, what's gonna happen is you're just gonna lengthen this part or this period or phase before you see this one, and this can take you roughly 10 years if you are still jumping from strategy to strategy. So the best thing to do is actually to avoid the noise. Try to find only one setup or one strategy, master it, backtest it, understand it, know it as you know your mobile device, know what you are looking for, know when it presents, know everything about it, the A to Z about that setup. Okay, that's when you will start seeing changes. Okay, so the most important thing actually is to focus only on one strategy. I repeat, one strategy, not the strategies on this channel alone. No, you can find any strategy that you understand, anything that works for you. Okay, now let's look at the advantages of focusing on one strategy. Okay, there are a number of advantages for focusing on one strategy, but the first one, let's just say you know exactly what you are looking for. Okay, when you know what you're looking for, even the confusion is actually minimum. Okay, because you don't have to be confused. You know exactly what you are looking for. You know exactly how your setup should look like, where you'll take your entry, where you'll put your targets, and where you'll put your stops. Okay, so this is important. Most people go to the screen, they get confused, they don't even know what they are looking for, so now they are guessing. If prices are going up, they want to go up. If prices are going down, they want to go down. That's not a way of trading. You need to know exactly what you are looking for. Okay, so if you come to the screen and you see, okay, they're still playing, and your setup is in play but it has not met all your criteria, you can simply tell, okay, now I'm waiting for 1 2 3 4 5. If that 1 2 3 4 5 is given, you know where you're gonna take your entry. If that 1 2 3 4 5 it's not given, you know there's nothing to do on the day. Okay, because you know exactly what you are looking for. This is the hardest thing for many people. Many people don't even know what they are looking for. Okay, so when you focus on one strategy, it's going to be very easy for you to know exactly how your setup should look. When you come to the screen, you know, okay, this one is not ready for today, because you know exactly what you're looking for. Secondly, you're going to spend less time on the screen. When you know what you're looking for, you can just look at a pair and say, oh, this one is not ready. Okay, or else oh, this one is okay, it might be ready, I'm waiting for this and this and this and this, and if this and this and this happens, you're going to take your trade. Okay, if this and this and this doesn't happen, you're not going to take your trade, and that again simply means you're going to take less trades. Okay, less trades, which is the goal. Unfortunately, many people think like, okay, the more trades you take, the more profitable you're gonna become. But in reality, the less you take, the more profitable you're gonna become. Why? Because you want to preserve your capital. That's the most important thing, preserving. I always say trading is like hunting. When you are hunting, you don't shoot at birds if you are targeting elephants. Why? Because you're gonna deplete your bullets. Say maybe you have 10 bullets, you hit 10 birds, yes, you ace that. Okay, however, when the elephant passes, you're just gonna regret. With your 10 birds, you're gonna regret when one elephant passes. Why? Because that's what you went out for. Okay, so less trades is important. Less trades is gonna make you highly profitable. Okay, and to take less trades, you need to know what you're looking for. If what you're looking for is not there, you're not gonna take any trades. Okay, and obviously you're going to spend less time on your screen. This is important. You're going to spend less time on your screen, because if something is not ready, there's no need for you to be in front of your screen. Okay, there's no need for you to be in front of your screen if your setup is not there. Okay, and then another thing, you're going to have a high win rate. Why? Because if your strategy has a win rate, say maybe a win rate of 50%, that simply means out of 100, you're going to win 50 and lose 50. With a good risk reward, you're going to be profitable. So when you are actually taking less trades on a strategy that has a higher win rate, obviously you're only going to take trades with high probability, which is actually going to improve your win rate. Okay, because some people try to catch moves going up, going down, they don't know what they are doing. But if you know what you're doing, you're gonna have a high win rate, and you only get that once you are focusing on one strategy. Okay, and then you will be able to improve. Why? Because we all know that to improve, we need to journal. That is, we record our recent trades or our previous trades. We analyze the results. What happened? If it's a loss, what went wrong? Did I take a loss that like, for example, I followed my plan completely? If you did, that's a good loss. But if you maybe jumped in early, you didn't wait for all the criteria to be met, you took something that is not even part of the strategy, then you know that, okay, I made a mistake, I did this and this and this, so that you can improve. Okay, you will mitigate all the mistakes, and that is what makes better traders. Okay, and then one last thing that I love, that I say every day, is rinse and repeat. Now you're gonna rinse and repeat. Rinsing and repeating simply means taking the same trades each and every day. Okay, yes, there's gonna be losses, yes, there's gonna be wins, but you are taking the very same thing over and over again. And when you get to this stage, honestly, you're gonna be surprised as to why people think trading is difficult. But you're not gonna get here unless you have only one strategy or one setup that you are focusing on. So I'm not saying focus on the setups that are on the channel. No, I'm saying find a setup that works for you, find a strategy that works for you, a strategy that is easy for you, because the goal is not to actually be smart or try to be different from others. No, this the thing or the goal is to have the most easiest trade each and every single day, rinse and repeat. So if you know what you're looking for, then it's rinsing and repeating, because when you come, you know, if this is not what I'm looking for, you are not taking it. That's rinsing and repeating. You are taking the very same thing over and over and over again each and every day. Okay, so these are the advantages of having one strategy, and believe me, this will make you a very happy trader. Okay, a very happy and a good trader. Okay, good trader. Okay, so guys, let's continue. Now that we've gone through the advantages of having one strategy, I think it's time I share the strategy that I really see the most results from, okay, so that you can replicate if you don't have a strategy. Okay, so I believe this is gonna shorten this curve here for you. Okay, and that is my ultimate goal. So as you can see here on the screen, the most explosive trading strategy for indices. So this tells you that this strategy works for what? For indices. And I usually trade three indices with this strategy. First of all, it's US 30, which is now my favorite. I used to love gold, okay, but now I love US 30. Okay, I traded gold with different strategy, but now I'm enjoying US 30 with this strategy. Okay, and I'm gonna share everything with you so that you don't get confused. Okay, and then NAS 100, NAS 100, NAS 100. Yes, it works well on this one, and also on US 500. Okay, US 500, it's actually S&P 500. This is Dow Jones. Okay, and this is Nasdaq. Okay, sorry, this is just an N. So I use this strategy on these indices, and more especially on this one. It works like magic on US 30. Okay, I get it every day. You'll see when we go to the charts. Okay, so guys, when it comes to this strategy, we have a number of benefits. Okay, let's look at the benefits first. The benefits of this strategy, benefits. Okay, sorry, don't mind my handwriting. Okay, as I already said. Okay, so the benefits of this one is the fact that it's explosive in nature. Okay, explosive in nature. So this means two things. When you enter, you're most likely not gonna see any drawdown. Okay, drawdown. Okay, you're not gonna see drawdown. Okay, you're not gonna be in a loss most of the days. Okay, you're not gonna be in a loss. Okay, you're gonna be in profit eventually. Why? Because these are explosive kind of trades. And secondly, your TP will be hit very quick. Okay, so on average, mine has been hit in roughly, let's just say, 5 minutes. Okay, because sometimes it is hit in 1 minute, sometimes 2 minutes, some of the days 5 minutes, yes, and there are days where it could go to 15 minutes, but most likely it's gonna be less than 30 minutes, which is why I say if your TP is not hit after 30 minutes, okay, close the trade. Okay, why? Because these are explosive, and they are indices, as I've already said, and indices are explosive. 50 pips is what we target, and 50 pips shouldn't be a hassle. So it goes straight to take profit, and then you are done with the day. Okay, and then another benefit is that you don't have to be on your screen the whole day. Okay, you're only there during the New York session. Okay, New York session, that's when I start looking for a trade. New York session, and when the opportunity is presented, I am there for less than 15 minutes. But what I do is I'm gonna take the trade, close my charts for an hour, come back after an hour, and when I come after an hour, my take profit is hit or my stop loss is hit. As I said, you're not gonna see drawdowns. Okay, so the thesis is, if you are wrong, they're gonna hit your stop loss right away. Okay, they're gonna hit your stop loss right away, which is good, because if you are wrong, you know that, okay, I was wrong. You wait for the following day, so you don't have to be in front of a screen the whole day. Okay, so basically, you know when you know the time when the opportunity is presented, because sometimes it's going to be presented at 10 o'clock, or if not 10 o'clock, we look at 10:30. Not 10:30, we look at 11 o'clock. Not at 11 o'clock, 11:30. Not 11:30, 12 o'clock. Okay, we are on the screen for roughly 4 hours, provided the opportunity is not presented. Sometimes it's going to be presented within 30 minutes, and it's going to hit take profit within 15 minutes. So we are in and out in less than an hour, which is very, very good, because you don't want to be standing in front of your screen the whole day. Okay, you need to know exactly what time it presents. Okay, which is a very big benefit for me, because I don't want to be in something the whole day. I don't want to be stressing out the whole day, and besides, it's all about freedom. Okay, so these are one of the advantages, or the 3 advantages, as to why I love this setup. Okay, and I know exactly what I'm looking for. Okay, so these are the advantages of this explosive trading strategy for indices. And now let's go and look at the criterias. Okay, because I want to share with you the whole strategy. Okay, as I've said already, this is a different video, because this is not whereby I show you what is trend lines. I can do that roughly in 5 minutes. Okay, however, the difference with this one is that this is an entire strategy. This is an entire strategy that you just have to implement right away. Okay, so that's why this video is going to take some time. Okay, it's an entire strategy. So there are a number of criteria we are looking for, and these are things that have to happen before we take a trade. First of all, I repeat, first of all, we want to see trap volume before the session. Okay, this is trap. Okay, trap traders before let me say before the session begins. Okay, and you can identify this roughly 15 minutes before the session begins. Okay, so I'm going to tell you which session it's going to be. Already I said the US session. Okay, so we want to identify trap volume before the session, then we wait for New York to open. Okay, then we wait for New York to open. Okay, and this opens at, okay, sorry guys, this opens at 9:30. This opens at 9:30 US time. Okay, I'm in South Africa. Obviously I'm gonna include South African times here. So South Africa, it's gonna be 4:30 p.m. Okay, 4:30 p.m. Okay, 4:30 p.m. So you see, most people who are working knock off at around 4 p.m. So you will have roughly 30 minutes to prepare or to open your charts, so you can trade this strategy even if you are employed full time. Okay, because the equity opening is 4:30. Okay, and that's another advantage. This, guys, is an advantage, to be honest. Okay, and then another criteria is we want to see trap volume during the session. Okay, trapped volume during. Okay, this is trap volume during the session. Sorry for my caps. Okay, sorry. Okay, what am I doing actually? Okay, sorry for that. Okay, we want to see trap volume during the session. So now we have 2 types of trap volume. I'm going to explain all these things. Okay, and then another criteria is we need to see what I call the evidence candle. Okay, evidence candle, the evidence candle. Okay, I'm trying to lay out these steps as clear as I can, so that nobody can come and say this is hard to understand. Okay, the evidence candle. And the reason I call this, or I wait for the evidence candle, is because most people are trying to catch the move or the trade. I'm not trying to catch it. Okay, I'm not trying to catch it. I'm trying to ride on it. That is, I wait for them to confirm or to move in the direction, then I ride on it. Okay, for me is to ride on it, and that's the most important thing. Okay, to ride on the move. That's why I use the evidence candle. It's very, very, very important. Okay, not to say, oh, this is a pin and then I'm getting in hoping that prices will reverse. Why? Because a pin is highly associated with reversals. No, we are not doing that. Okay, what we are actually doing is we are actually, let me put red here, because this is not what we are trying to do. We want to ride. Okay, so I'm gonna put green here. Okay, so I hope you understand. I hope you understand this. Okay, and then we target 30 pips. Why? Because we understand that sometimes, okay, let me just show you here, sometimes it's gonna be an uptrend, okay, and then the trapping will happen here, and the engulfing candle will happen here, the evidence candle, okay, and this move will be a counter trend, as you can see, before prices continue up. So for me, I want the opportunity. I don't want to say, okay, people or books will tell you to actually sell here, buy here. That's not what we are doing. We are waiting for trap volume. We are waiting for our setup to complete and present, okay, precisely and clean, okay, then we are taking it. We don't care if it's a counter trend, okay. Why? Because it's on, no, yes, sorry guys, I made a mistake here. I said we are taking 30, we are taking 50 pips, okay, not 30, okay. So I understand that, okay, for an indice 50 pips shouldn't be a hassle, even if it's a counter trade. 15 pips shouldn't be a hassle, okay. 50 pips is gonna be easy to take, because mostly they're gonna go 70, 60, 80, okay, if it's a counter trend during the day itself. So that's why I'm saying we are always targeting 50 pips. And if you have been following me for quite some time, you know that I'm strict when it comes to 50 pips. I don't care if it goes 300, 500 afterwards, or maybe if I'm on the trend, I don't care. I need my 50. That's it, okay. That's it. 50 pips each and every single day, okay. Sometimes it's gonna be a loss, okay, yes, we know that, but 50 pips strictly, okay. And then just as a bonus, I will say pay close attention to hours, and half hours, okay. Let me just say 1/2, because this is an half, it's half, okay. So pay close attention to hours or half hours, okay. This is highly important. Why? Because I said the equity actually opens at 9:30, so please pay attention to the candles that actually open at 10 o'clock. If nothing is presented, pay close attention to the candles that open at 10:30. If nothing is presented, pay close attention to the candles that open at 11 o'clock. So we are paying close attention to the half hour mark and a new hour, okay. So this should be easy. So you see, when you're actually focusing on one thing, you know exactly what you are looking for, and you know exactly what should happen before and when. That's very, very important. I hear people saying, oh, this is hard, this is hard, this is hard. It can't be hard if you know what time to expect something. It can't be hard if you know exactly what you are looking for. Guys, it filtered everything out, okay. So we are only in front of our screen for roughly 4 hours, only if nothing has been presented. If the opportunity is presented after 30 minutes, say maybe at 10 o'clock, then we are taking it. We are taking it, and 15 minutes, the thesis is the take profit should be hit. So you're only there less than an hour, and then you walk out or away from the screen and continue with your day, okay. That's what we want, simplicity, okay. So guys, right now, let's look at something very important, okay. Okay, one thing people have been confused about, and something people have been asking about, is how, or what do I mean by trap volume during the session, okay. Let me rather put this here, okay. Trap volume during the session, sorry, okay, it's trap volume during the session, okay. So please understand that this one simply means trap volume during, okay, this is trap volume during the session, okay. So what do I mean by trap volume during the session? Okay, when it comes to trap volume during the session, I'm talking about things like patterns. We use patterns to identify trap volume during the session. We use what? We use patterns, and these are not new patterns or patterns that I have developed. No, these are patterns that have been there for decades and decades and decades, okay. Let me just bring a picture right here that has trapping patterns, and I'll show you where I got this picture from, okay, because this is a very simple picture of trapping patterns. As you can see, we are talking about these kind of patterns, okay. This is a double bottom, this is a head and shoulder, this is a wedge, okay. This is a wedge. We have different kinds of wedges, and we have many different kind of wedges, okay. So this is a triple top, but this is my favorite, whereby they trap using a rectangle. It's my favorite, okay. sometimes they're gonna give you wedges. So I love it when they give me wedges, and I also love it when they give me what? Rectangles. Okay, this is a double bottom, this is a head and shoulder, it's an inverse head and shoulder or inverted head and shoulder. This is again a wedge. Okay, this is a triple bottom, as you can see. Okay, these are the trapping patterns. And just to simplify everything, okay, to simplify everything, if you need to know trapping patterns, just do a simple Google search, chart patterns. You can search chart patterns right here. Okay, you can choose any. As you can see, the one I've just showed you is this one. Everything is on Google is this one. Okay, you can come and choose this one as well. These are trapping patterns. Okay, these are the patterns we want to see during the sessions. Okay, yes, here they have a little bit more. Okay, but you can choose any. You see, these are trapping patterns. Okay, yes, here they have entries and targets, but for us it's a little bit different than here. Okay, because we are targeting uh a fixed take profit. Okay, because it's 50 pips, and we are waiting for evidence candle. We are not just entering if it's a breakout. No, we are entering if they give an evidence candle. Okay, so there are many, guys, there are many. You can choose any one you need. These are trapping patterns. You can choose any one you need. Okay, just, you see, these are trapping patterns. Just make sure you print it, you put it on your table or stick it to your wall so that you see it every time it presents. This will really help you. Okay, this will help you. Okay, so when it comes to trapping patterns, that's what we are talking about, these kind of patterns. And let me just give you one psychology behind my favorite trapping pattern. As I said, my favorite trapping pattern is the one whereby they actually use this. Okay, they actually use a rectangle. Okay, say maybe, yes, they are trapping. I'm using a 1 minute chart, mind you. Okay, say maybe they are trapping. They break out here. Okay, fine, that's not what I need. And maybe they start giving me something like this, and then they give an engulfing candle here. Say maybe this is one big engulfing candle. Okay, so this is my evidence candle. Why? Because my evidence candle is always an engulfing candle, but I'm gonna explain a little bit more okay, in a minute. Okay, so when they are trapping here, one thing I understand is that there are many things happening, okay, that I can actually explain. The psychology behind is something I can explain. First of all, they are creating something called an illusion. This is what people call a resistance, right? This is something called, people call a support. And as it keeps bouncing here, what's gonna happen? People are gonna start selling here. Okay, actually people are gonna put pending orders right here, so that pending sell orders, when it prices reach here, they want their sell to be activated, and they will put their stop losses maybe somewhere above here, right? That's what people are gonna do. Okay, so they know that, okay, this is a strong support, as book says, so they are anticipating prices to do this, to come and hit this level because it's strong, and then bounce down, and their take profits will be here. Okay, so this is literally creating an illusion. Up here there's an illusion, down here there's an illusion. Okay, people are also doing the same here. They are putting buy orders here, expecting prices to bounce back, and their stops are going to be somewhere here. Okay, so I don't buy a breakout just simply because it's a breakout. Okay, no, it has to be an engulfing candle, it has to be an evidence candle. Okay, what I mean by an evidence candle is I must see that, okay, all those, if it's breaking to the upside, I must see that everybody who sold is actually in a loss, a very big loss, and relying on hope. They are praying for prices to come back to break even so that they can exit at a small loss. And you know, if you ever found yourself in that position, if you have been trading for a while, I believe you've once found yourself in that situation. And if you have once found yourself in that situation, you know quite well that prices will never come back to that level. Actually, they will keep digging deeper and deeper up until the time where you now feel like, oh, I have to close my trade because I can't take the loss. It's big, it's way too big, and I can't bear it. Okay, so that's the thesis. Once we know who is trapped, once we know who is feeling it the most, who is in the biggest heat, that's when we want to join the punishing of it. Okay, we have been punished by the market countless times, so now we are wise enough to know and to ride on that punishment. Remember, I said we are riding, we are not guessing. Okay, so I need a very big engulfing candle. Okay, I need an engulfing candle that immediately shifts the zone. So when prices bounce here, Hey, this is important. You see, when prices bounce here, maybe they do something like this. Okay, what they're doing is they're actually showing people down here that, oh yes, what you are thinking that prices are gonna bounce here and go back, it's really happening. Okay, it's really happening. So even those who are not in the market are now doing it. They are now buying because they don't want to miss the move. And then, oh, this was a joke. Haha, this is a zero sum game for somebody to actually buy, somebody has to sell. So for one to lose, somebody has to win. Okay, so that's what we know. So this is what I want to enter immediately when this candle closes. This is where I want to enter and put my stops right here. Why? Because this is they are not gonna come back to these guys. Okay, they are not coming back. And up here, I believe the stops, they've been hit by this candle already. Okay, so this is my main favorite trapping pattern, and I want to see it complete. Okay, some people are not patient. People don't want to wait for the patterns to complete. They want to enter early, and then they will come and say, oh, this is not visible, this is not visible, this is hard, this is hard, this doesn't work, this doesn't work. Guys, if you don't understand something, it doesn't simply mean it doesn't work. Okay, if you are trying to catch moves here, Peter Branded, I also refer you to Peter Branded's channel. Why? Because Peter Branded explained that one thing he hates is to make a decision when prices are moving in a rectangle. Why? Because he doesn't want to make a decision when they are actually gathering orders, because simply they're gathering orders up here, they're gathering orders down here. Okay, so we already know market makers, how they buy and sell. Okay, they do that in portions because retail guys don't have enough equity to go against them. Okay, so we already know that they are gonna actually show you that it's selling, buying, and trap. Believe me, many people are blowing accounts right here. You don't want to be part of the statistics. I'm waiting when all this is happening. I'm just waiting and observing. Okay, waiting, because people don't want to wait. Bill Lipschutz, if people can wait 50% of the time, they will make more profit. Okay, patience is important when it comes to this kind of a business. Don't get your emotions stirred up quite quick. Why? Because this is a game of emotions. They're gonna work on your emotions, give you a lot of engulfing candles while they're still trapping here. That's why I said I want the evidence candle. I don't want any engulfing candle. I want the evidence candle. So I hope now you understood the trapping patterns, okay? Because I've showed you a lot of trapping patterns. These are trapping patterns, okay? These are trapping patterns, okay? And my favorite one is a rectangle, okay? It's just that the rectangle here on these kind of patterns, it will be shown when they're actually showing a triple top, but it's the same psychology. Okay, you see, this is gathering orders. Chances are they will break one side, get you to take the opposite and go to the opposite side, but you must know what you are waiting for. I don't care which side they're gonna break in. I just want to see people who are now trapped and relying on hope, and that's the most important thing for me. Okay, that's the most important thing for me. So guys, I believe now you understand what I mean by trap volume during the session. Okay, we waited for the session to open, so now we just want to see trap volume during the session. We want to give them sufficient time to complete their trapping. Sometimes they're gonna use a head and shoulder, sometimes they're gonna use a double top, sometimes a triple top, sometimes they're gonna use a wedge. Okay, I'm gonna show you in the examples. You'll see what I mean by trapping patterns. This is the most easiest trading strategy. Okay, the simplest one. Just put it into practice. Okay, so now you understand what I mean by trap volume. So let's continue. Okay, everybody, now let's look at the evidence candle. Okay, because I still know there are many people who are still getting confused by the evidence candle. An evidence candle is simply an engulfing candle. Okay, let me just put this here. Okay, sorry guys for that. Okay, forgive me for that. Okay, let's put it here. It's actually an engulfing candle. Okay, it's an engulfing candle that shift the zones from trap traders. Okay, trapped. Okay, so this is the engulfing candle that shifts the zone from trap traders. So it's not any engulfing candle. Why? Because as I've already said earlier on, when they are trapping, they are literally gonna give you a number of engulfing candles, and that's because engulfing candles actually are big candles that do one thing very successfully, they temper with your emotions. Okay, they temper with traders emotions. Okay, and most traders are gonna execute after engulfing candle. So I'm not looking for any engulfing candle, I'm looking for an engulfing candle that shift the zone. That's why I'm actually calling it the evidence candle. So let's look at what I mean by an evidence candle. Say for instance, I've just spoken about the patterns. Okay, say for instance, they start consolidating here. Maybe prices have came down. Okay, and now they start consolidating here. At this moment, I am doing nothing. Why? Because they're gonna give a number of engulfing candles. You'll see this when we go to the charts. Okay, so they're gonna give you a number of engulfing candles, and they can break in either direction. Okay, they can break up, they can break low. However, we have to know where volume is trapped before the session, because mostly they are not gonna go and release those who are trapped. Okay, so we must trade with caution if they break into the direction of trap traders. And another thing I want to tell you is that we're not just gonna enter on any engulfing candle that is a breakout. It has to be an evidence candle. Say for instance, they break out here. Okay, this is not where I'm gonna enter. Okay, say maybe they broke out and this is not really an engulfing candle that shift the zone. I'm not gonna enter. Okay, because they can still do something like this. They can still come down and then break to the outside and then just do something like this, or else they can do something like, okay, let me just remove this quite quick. They can do something like okay, they can do something like this. Okay, as I've already said, they have created an illusion. Okay, they have created an illusion, so people believe that this is now what, this is now the strong support. Okay, people are buying, all buying orders are activated. Okay, and now we have stops here, and more volume will actually be doing what, more volume will be coming in buying. Why? Because support and resistance. Okay, and when you come here, you'll find that, okay, this candle right here just closed everybody else, and now they can just do something like this. Okay, this is still part of trapping, and then they can just break down. Okay, so what I actually need to see is, for instance, maybe let's say this red candle over here, it's an engulfing candle that like comes like this. Now this is an evidence candle. Okay, let's say this is a huge engulfing candle. Up here before this candle, we can get an inside candle, we can get a pin or whatsoever, I don't really care, but this is an engulfing candle that shift the zone. And when I speak about shifting the zone, now everybody whose order got fulfilled, maybe somewhere here inside this red box, is literally what, is literally trapped. And when this candle closes over here, let me use a green color. Okay, let me actually use a dark green color. Okay, when this candle closes over here, obviously everybody whose order got fulfilled here is now relying on hope. Why? Because if they're over leveraged, or else if they used a bigger lot size, they are hoping that prices can just come back up so that they can maybe exit with small losses. Okay, because this candle, when it closes, you have to know that all those who actually bought inside here, whose orders got fulfilled here, are now at a very big loss immediately, because this is just one candle that goes down, and I'm using a 1 minute candle. So if when it closes here, maybe somebody with a $1,000 account is at a loss of $100. This is a very big loss. If you have maybe $1,000 account, okay, maybe somebody who has a $100,000 account, let's say maybe they're immediately at a loss of roughly let's say $8,000. Maybe they used a bigger lot size. This is a very big loss. Okay, this is a very big loss. Okay, because it's roughly 8% of this account. So this is a big loss. It's unbearable. Okay, so these guys are literally praying, these guys will be praying, okay God, let prices go back so that I can exit with at least a $20 loss. And these guys over here will be praying, okay God, let prices go back so that I can exit at least with $100 loss. Okay, that at least they can accept $100, because $800 is a lot, and these ones can accept roughly $20 because $100 is a lot, provided they have an account size of $1,000. Okay, so we need to know that, okay, these guys are relying on hope, and the only time they'll be able to close a trade is maybe if they are at a loss of $600, and now they will be forced to close their trade. Why? Because obviously they're going to blow their account if they don't close. And these guys maybe over here, if their account grows maybe to $30,000, I'm just giving an example, $30,000, that simply means they will actually be forced to close a trade. That's why I'm saying these kind of trades are explosive, because they want to punish those who are relying on hope or luck or whatsoever it is, those who are praying for prices to come to break even. Okay, so that's why we target 50 pips, because they are gonna go at least 50 pips. Imagine if somebody is at a huge loss with maybe this candle only took 12 pips, okay, and people are at a bigger loss. Obviously by the time it reaches 40 pips, these losses are going to be massive and people will be forced to close their trades. Okay, so this is the kind of engulf I need. I'm not saying it's an engulf because it broke out. No, it must be an engulf, and we must be able to identify everybody who is in pain. Okay, pain, this is the most important thing. I repeat it here, pain. Okay, we must be able to identify those who are at pain. Okay, if you can't really tell who is really relying on hope, who is in pain, then you don't take the trade, because that's not an evidence candle. I told you our goal is not, say for instance, maybe they gave a pin somewhere here. Our goal is not to catch a pin. Why? Because maybe they gave a first pin here, and when you sold here they came back here, and when they gave this, maybe you are tired or you are doubting yourself because you took a loss here. If this was a big loss, obviously you're not gonna get the strength to take the trade again. Okay, so we are not trying to catch these ones. We want evidence. We want confirmation that now they are moving in our direction, because we are not gonna target 100 pip. We only need 50 pip, and that shouldn't be a hassle. So I'm just trying to explain the evidence candle in a way that I believe most of you will understand. So I have something again right here. Okay, I have this book. It's actually called The Power of Japanese Candlestick. Okay, The Power of Japanese Candlestick. Okay, it's printed by Willy Trading. Okay, as you can see here, the power of the power Japanese candlestick. If you come to page 15 here, okay, you can buy this book online, you can get a hard copy, it's up to you. But I'm not saying you should get it. Okay, but if you think you can get it, it's okay. This one actually shows you different kinds of candles, because the whole book is about candles. Okay, the whole book is, it's about candles and candles only. So if you look here, this is the Marubozu candle. Okay, the Marubozu candle is it's an engulfing candle, but engulfing candles come in different variations. I'm just trying to show you this. And you see this candle, it has no wick up here, and actually it opened here and it closed up here, because you can see it's actually white, which will be green if we were actually using red and green. Okay, red and green, yes, of course, red and green. So let's listen or read here with me. Okay, in describing a candle, it means there is no upper or lower shadow. That means there is no wick. A long Marubozu white candle is considered extremely bullish because it has no shadow. Okay, there is no like selling pressure up here. This candle closes without a wick up here, so this is a very strong candle. However, they come in different variations. As you can see, there are these kind of candles here which have a wick down, wick up here. These are okay, if you want to understand the strength here, you can just read here. Let me show you. Okay, it is a strong candle, but not as strong as the long Marubozu white candle, because there is some selling close to the open. Okay, so this one is literally strong, but not as strong, because you can see there is some selling pressure here. There is a wick, and look at this one, it has a wick down here, but it has no wick up here. So this one should be considered as strong as this one. Let's read. Okay, okay, it is viewed as a strong day, and the interpretation of this long closing Bozu, this is a Bozu candle, okay, is similar. Okay, is similar, and the interpretation of this long candle, of this long closing Bozu candle, is similar to that in analyzing the long Marubozu white candle. So this one, it's almost the same as the Marubozu candle, and it is considered is very strong candle. Okay, as you can see, it's different from this one. This one doesn't have the wick down here, but it has a wick up here. So this one is not actually as strong as the Marubozu candle. So understanding candles might help you, but again, I'm not saying you should go and get this book. No, I'm just trying to show you that most of the time the engulfing candle is gonna be something like this. It's not gonna have a wick. Okay, most of the time the engulfing candle is not gonna have a wick. I'm gonna show you in the charts. Okay, but that is that. Okay, that is that. I'm not saying you should get this candle. And the another thing I wanted to show you is, you see this candle, it was a very long engulfing candle, however it closed as a pin. So this is why I always want to wait for candles to close before entering. Okay, because sometimes they will just trick you and do this, and maybe they do this at the breakout, and then now you think, oh, this is that candle, just to find that, okay, when there is roughly 10 seconds, they just come and close. So I literally wait for the last 3 seconds, or I wait for the candle to close. Okay, so that's important as well. And just know that most of the candles are gonna be like this. They're not gonna have a wick up here. Okay, and these are very, very strong candles. These are strong candles. Okay, so just remember this. You can actually take a screenshot. Most of these candles are gonna be like this. Sometimes they're not gonna have a wick down here, and they won't have a wick up here, which is literally the same strength as this one. Okay, because this candle over here has the very same strength as this candle over here. As you can see the variation, this one has like a wick down here, but this wick makes no difference. Why? Because this is a bullish candle, it's not a bearish candle. If it was a bearish candle, what's going to make all the difference? But because there is no wick up here, that simply means there is no selling up here. So this candle is just exploding immediately. They are shifting the zones immediately. Okay, so just think about this. Okay, because most of the candles that are gonna shift the zones are gonna be like that anyway. Okay, they're not gonna have any wick. So yeah, in other words, reading will only improve you. Reading will never do any harm to you. So it's important to read books, it's important to buy books. Besides, if you want to be a trader for the long term, you must invest a little bit into knowledge. Okay, so reading will help you. I enjoy reading, I love reading every day. Okay, because that improves my knowledge. That's why I'm trying to show you that the candle that changes the zone is mostly gonna be like this, or it's gonna be like this if it's bullish. Okay, if it's bearish, again we have bearish candles. Okay, we have bearish candles. Let me just show you. But the concept is the same. Okay, the concept is the same. It's just that it's gonna take a little bit long. Let me go down. I just don't want these candles to be long. You see this one, it doesn't have a wick up, it doesn't have a wick down. It's actually called the long Marubozu black candle. Now the difference is only the colors. Okay, it's only the colors. Okay, okay, as you can see, this one is a little bit weaker as compared to this one. Why? Because, okay, wait, yeah, this one is stronger. Wait, no. Okay, this one is a little bit weaker as compared to this one, because this one doesn't have any buying pressure below. Okay, it doesn't have any buying pressure below. So these candles are completely different. They also make a difference. Okay, but I'm not saying you have to have this book, you have to understand these candles. No, just understanding that we are talking about shifting of zones is very, very important. But I just wanted you to understand these things. Okay, I need a candle that shift the zone. Okay, and most of the time this candle is not gonna have a wick. If it happens upside, obviously the candle is not gonna have a wick, but we must be able to see those who are in pain and relying on what? On hope and praying. Okay, because we know that the markets will never ever release these guys. These are the guys the market wants to see. Once you are trapped and relying on hope, you are the food of the market. Okay, so I believe most of you understand this one, because you understand the patterns. Now I believe you understand the evidence candle. I'm gonna show this on the examples themselves. So guys, I believe this took a little bit too long, but I believe it makes all the difference, and I believe you understand. So let's continue. Okay, now that we know our evidence candle, we know what trap volume is, we know all the criterias. Now let's look at the entry and the exit. As I said, I always want to focus on 50 pips. Okay, I don't compromise when it comes to 50 pips. So that's something you must know. Okay, when trading this strategy, I always focus on 50 pips. I repeat, 50 pips. I'm writing this everywhere so that you can know. And my maximum risk is 25 pips, okay? 25 pips. This is the maximum risk, okay? Risk is 25 pips. That's the maximum, okay? Sometimes my risk is 12 pip, 10 pip, 15 pips, but I am willing to go as much as 25 pips, okay? So my risk, okay, risk target, okay, this is my target. My target is of course 50 pips, okay? I don't compromise on this one, and my risk is literally 25 pips, okay? Because these are indices, so this can range from anything. It could be 10. I don't want to keep it 5. I don't want to keep it too tight, okay? It could be anything from 10 to 25, but mostly it might be 15 pips, 18 pips, okay? But yes, I am willing to go as much as 25 pips, okay, risk. Why? Because these are explosive trades, and if they're gonna hit my 25 pips, that simply means I'm wrong. And if I'm wrong, I'm gonna wait for the next day. I'm not gonna revenge trade, because it's much easier to revenge trades when it comes to this kind of trades, okay? Because you'll be trading the 1 minute, you'll think, oh, I was wrong, and then this and this and this and that, okay? So I don't want to revenge, okay? I don't want to revenge. So if I'm wrong, I'm wrong. And I know that, okay, if say for example in a week we have 5 days, it happens almost every day. Say maybe I get this set up four times a week, and I take, maybe say for instance I take 2 losses and 2 wins. That simply means out of these 2 losses I lost 50 pips, okay? And out of this wins I won roughly 100 pips, okay? So you can see I'm still at a huge profit, okay? I'm at a huge profit. So my risk reward is very good, okay? And I'm at a very big profit, provided I have used the maximum risk that I'm willing to take, okay? So that's the main objective, okay, to be in a win, okay? So let's go through my entry quite quick. It's not even gonna take time. Sorry, let me erase this, okay? Because it wouldn't be fair if I don't discuss everything. Remember, here I'm giving you the whole strategy. This is not just a video about trend lines or this on that and that. That's why it's long, and I know most people don't want to see long videos, but it's okay. Those who want to see it, those who want to learn the strategy, can just learn from here, okay? So that there's something that's going to help you with your entries. Usually there is a 20 moving average, and what a 20 moving average will do, you'll see something like this, okay? Something like this. So as you can see, if it's gonna go down, it's gonna be inside the EMA, okay? I'm not gonna sell if it's above the EMA. I'm gonna sell if it's inside the EMA, okay? This should be your 8. If it's gonna go up, it has to be a candle, evidence candle inside the EMA if it's gonna be a buy, okay? So that is highly important. The EMA will really help you and make some things simple for you. As you can see, it might go like this. It's an EMA of 20 exponential EMA. I repeat, 20 exponential EMA, because people are gonna ask me what is the EMA. I repeat again, it's a 20 EMA, 20 exponential. This is exponential. It's not a symbol, it's an exponential. So it's 20 EMA, okay? And the candle is inside. This shows you that the move is in line with the trend, okay? So I told you, if it's a counter trend, it's good, but this move is inside the EMA. So 50 pips should not be a hassle, okay? 50 pips should not be a hassle. Why? Because we are trading indices. So this is what governs my entry, and 50 pips is my target. Roughly my stop loss is around here, so that's why I told you it's gonna be 25, okay? Why is my stop loss here? Because these trades are explosive. I don't expect them to go back, okay? If they go back and you are wrong, you want to be stopped immediately, because you don't want to be caught in a position whereby you are relying on hope and prayer right now, okay? You want to be closed out immediately if you are wrong. And that's why I say 50 pips should not be a hassle, and it's gonna get hit very quick. Sometimes it's gonna be 5 minutes, sometimes it's gonna be 2 minutes, sometimes 15 minutes, maximum roughly 30 minutes. If it goes beyond 30 minutes, I will close. But what I do is I take my trade and I close my charts. I wait for an hour and I come back after an hour. By the time I come back, either my SL is hit or my TP is hit. Okay, so that's what happens most of the time. And if it's gonna go to my TP, it's just gonna explode immediately into my take profit. Why? Because the thesis is these guys are trapped. The market is not gonna play around. It's gonna punish them. Maybe after going 60 pips, that's when they're gonna pull back and might continue in their direction if the trade was in line with an underlying trend that has already been established. But I don't care about this move here. I want to catch this move. I don't want to catch. I want to ride on this move here. As I said, my objective is not to catch, it's to ride. So this is the move I need. And when it hits here, I'm out for the day. I'm done. Okay, because my take profit will roughly be here, and yes, they will do this and pull back, okay, and continue, or they will pull back and give another pattern and reverse. But most of the time they're going to explode straight to my take profit. Okay, that's what I've experienced, because I'm sharing with you something I do every day. Okay, so that's why I'm telling you this thing. So the entry, I believe nobody's going to be confused. The target is 50 pips, no compromise. Okay, and then the stop loss maximum is 25 pips. I believe you all understand now. Okay, thank you guys. Let's proceed now. Okay, everybody, I believe now we all are aware of the criterias. Okay, we've shared most of the important things. Okay, but for a recap, let's just look at the criterias. We need to identify trap volume before the session. We need to wait for the equity opening time. We need to identify trap volume before during the session, and we need to identify the evidence candle. And I've already gone through all of this. Okay, so now I'm gonna start on Monday, last week's Monday. Okay, it was roughly 26 February 2024. Okay, so let's look at this. I'm on a 5-minute time frame. I can even go to a 15-minute time frame. It's okay. This is the time frame that allows me to identify trap volume, and as I've already said, we are mostly going to find trap volume below or above or on the closing price. Why? Because mostly indices move in the US session, and they're going to use the entire day roughly to consolidate or to gather volumes, and then they're going to give the real trade during the US session. Okay, so let's try to identify trap volume. Okay, this is trap volume. As you can see, they've been sending people down, down, down. Okay, so I'm just gonna put a box without a background. Okay, this is a pink box. This is trap volume. Okay, this is the first criteria. As you can see, it's below this dotted orange line, and this dotted orange line represents the closing price of Friday. Okay, the closing price of the previous day. The indicators are in the description. They are free downloads. You can just get them. Okay, and this is the high, and this is the low of the previous day. As you can see, this is the high. It's denoted here by these dotted blue lines. This is the low that was made on Friday, which is denoted by this blue dotted lines here. I believe we all understand now. So the first criteria is met. Okay, sometimes you're not going to be able to identify this, so you must trade with caution. Okay, this one doesn't really mean if it's not there, we're not going to take it. Okay, so we have identified the first one. Now what are we going to do? We're going to wait for the for the equity to open. Okay, I'm on a 5-minute time frame. As I already said, the first candle that opens the equity, doesn't matter the time frame. It could be the 1 minute, could be the 5 minute, could be the 50 minute. It's gonna be the biggest candle. You know why? Because most of the time it's gonna be a stop hunt, so you don't want to be standing in front of it. Hence, we don't chase the moves. We don't care what they do. We want to identify trap volume during the session itself. Okay, so criteria one, before the session, yes, we have identified trap volume. Before the session, it's below the closing price of the previous day. Okay, and yes, we waited for the equity opening time. Now let's go to the third criteria. Okay, now going to the third criteria, we need to identify trap volume during the session. Okay, so I'm gonna go to a smaller time frame. You know, I'm a fan of the 1 minute time frame. Why? Because by the time the opportunity is given on a 5-minute time frame, I'm already out and done for the day. Okay, but if you wait for it on a 5-minute time frame, then the like the trade is gonna be way too clean. Why? Because a 5-minute and a 15-minute or a bigger time frame is more cleaner, less noise. Okay, but for me, I just know that on a 1-minute time frame, I'm gonna see or find this opportunity almost every day, and on a 5-minute time frame, you might find it maybe 3 times a week. Okay, so that's why I love the 1-minute time frame. So now let's start looking at the trapping patterns. I believe by now you understand, and you might have printed the trapping patterns as we actually said in the first on the first part when we were actually looking at trapping patterns. Okay, so I believe maybe you might have printed and you might be holding them right now, so that you can just see as we are going through. Okay, so that next time it becomes easy. If you don't have a printer, you can just have them open on your mobile device or somewhere, so that you can see and refer back to them. Okay, so I told you my favorite trapping pattern is this, is the rectangle. Why? Because most of the time they're gonna give it in a rectangle, and even the wedge, they do give it in the form of wedge as well. So you see the equity opened. Yes, now what are we looking for? We are actually looking for trap volume during the session. Okay, fine, let's see. We allow them to go up. We're not chasing moves. Okay, we are not chasing moves in any way. So what do? They make a high. Okay, they start consolidating, as you can see. Okay, now we just identify, I'm not a fan of wicks. I love bodies. Okay, so I take the bodies. As you can see, this is a rectangle from body to body. Okay, they just consolidated here, and eventually they broke down. Okay, but this breakdown to me means nothing. Okay, to me it means nothing. As you can see, they didn't even break down using an evidence candle. So I'm waiting for an evidence candle. What do? They start going up again. Okay, you see, this is where things get a little bit interesting. Okay, they go up in a wedge. Okay, so what I'm literally doing is I'm just sitting on my hands. Bill Lipschutz, if people could sit on their hands 50% of the time, they will make more profit. That's a quote by Bill Lipschutz. He's one of the best traders in the world. Okay, so as you can see, they wedge. I told you I love this wedge. And after this wedge, what do? They break out of the wedge with an engulfing candle. And this engulfing candle also happens to break out of the rectangle. Okay, this is fascinating enough. Yes, this is not a very, very strong engulfing candle. Why? Because you can see there is a little bit of selling pressure here. We went through the strengths of engulfing candles. Okay, and I hope you now understand the Maribuzi and all sort of stuff. Okay, so yes, it's an engulf. So the main idea is everybody whose order got fulfilled inside this pink box, as you can see, is now relying on hope when this candle closes over here. Okay, that's what we want to see. Okay, so when this candle closes, I'm just gonna, okay, make this like this. Okay, so when this candle closes, now we know that everybody who went up here went up is literally trapped because their orders got fulfilled inside this pink box, and everybody who chased this candle here and chased this candle here, their order got fulfilled where? Above, inside this box. As you can see, they even gave a pin and an engulfing candle. So there are people who actually I fell for this pin. Okay, and they bought. So whoever's order got fulfilled inside here is relying on hope immediately when this candle closes, and that is exactly what we want to see. So yes, this is where I took my entry, and yes, it just came and touched 50 pips. Okay, let's come to this candle. It just touched 50 pips for me. Okay, because I took it on that candle and it touched roughly 50 pips, and that's where I took my take profit. Okay, yes, they just tapped 50 pips. Okay, and that was enough because it's an entry, and and as a stop loss just above here. If you look at it, I told you this is just 15 pips. Okay, 15 pips stop loss. For me it was, I think I put it at 17, 18, somewhere around there. Okay, because I've already said that I'm willing to risk roughly 25 pips. Okay, 10 to 25. Okay, but this one, yes, it just went vertical straight, hit 50 pips. But again, let's look at this. This presented another opportunity. This was a very, very interesting. Okay, I want to show you something. I told you, your ability to interpret the story that charts are telling you is very important. Okay, so look at what they do. They've trapped everybody here. By the time they broke out of here, we knew that everybody inside this box is literally trapped and relying on hope, and they are not going to release them. So what are they doing? They are coming and coming and coming. So they are literally wedging up. Oh, okay, they wedged up here. Even now they are wedging up, as you can see, and they then give a rectangle. You see, this is a rectangle. The same rectangle they gave here, they give it here. But the most interesting thing about this one now is that, okay, we have trap volume Okay, we talked about people whose order got fulfilled inside this box. Okay, so they didn't go up enough to release them. Why? Because once you rely on hope, they're not gonna release you. I believe if you've ever found yourself in that position, they never released. Okay, so that is the most important thing. Okay, and that's what we want to see. So yes, they never released these guys who are trapped above here, and everybody who fell for these moves over here just became part of these guys who are trapped here. Okay, make sure you don't actually execute into trap volume, because if you do, okay, which is why we want to identify trap volume before the session starts. The main idea is that they are not gonna release these guys. Okay, yes, sometimes they will, but most of the time they're not. So we want to be trading with caution. We don't want to be taking an execution back to the trapped volume. Okay, back to the inside of the trap volume. So we want to avoid this box by all means. That's what I do. Okay, so that's the importance of identifying trap volume before the session starts. So yes, did we manage to see trap volume during the session? Yes, here they used something like a rectangle and a wedge. Where is the wedge? Okay, let's just draw something like this. This is a wedge, as you can see. Okay, using this line and this is a wedge, and they break out of the wedge. Okay, again they give this beautiful slope. Okay, so they use the rectangle and a wedge. Okay, it's up to you what you saw, but this was a rectangle and a wedge, and here they used a rectangle. Okay, and they gave this slope that was going up, and eventually they closed out outside of this slope, which was enough evidence. But again, let's see what they did. They pull back a little bit and then they close. This candle is now strong. Okay, this is a very strong candle. So this was an execution and this was an execution. But for me, as I said, I execute, I wait for an hour. Okay, and then I come back, and one of the levels is gonna be hit, either the stop loss or the take profit. Okay, so this was hit in roughly 11 minutes. For people who executed on this candle, their take profit was hit in roughly 23 minutes, because this is the candle that actually knock them out. And you can see that was before we even get into the trap volume. Okay, so yeah, that's the most important thing. Okay, I told you these kind of trades are explosive. They are explosive, and chances are once you enter, you're not gonna see drawdown. So yes, they used the rectangle to trap. Okay, and they broke out, giving an evidence candle. And the most fascinating thing is, if you look at the EMA here, we have this black EMA. Okay, look at it carefully, you will realize that okay, they engulfed back into the inside. The same thing they did here, the same thing they did here. They engulfed back into the inside of the EMA, and we are not guessing, we are riding. Okay, so Monday was very clean, and it was very it was a beautiful trade. Okay, now we're going to Tuesday. Can we identify trap volume? Of course. Okay, this is trap volume. Oh, he's showing trap volume because this has played out. Oh, guys, remember, we are doing nothing. If you took any loss here, that's on you. Why? Because we are doing nothing. Okay, throughout the day we are not even on our chart. So if you have been taking losses here and you're gonna tell me this is difficult, it's on you. Okay, because I told you, we are sitting on our hands. We are sitting on our hands doing nothing up until when? Up until the equity open, then US equity open, which is the New York. Okay, 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 this is the New York session, up until the time the New York session opens. So if you took any execution here, it's on you. Honestly, it's on you. When I come before the equity open, I am just gonna try to identify this as trap volume. Okay, so we can see that everybody above the closing price is trap. Why? Because prices took them up, and eventually broke down. That tells you that these guys over here are trapped. Okay, and then we go to a what? To a 1 minute time frame. Okay, and then we are waiting for the equity to open. Oh yes, now the equity is open. If you take something here, then I might understand. Okay, but we are not chasing the moves. Okay, we are not chasing the moves. Why? Because now our job is to identify what? Trapped volume during the session. Okay, that's what we have to identify. So when we look at this, it just exploded down. We don't care about this. Okay, we want to see trap volume during the session. Okay, one thing we have from here is we have this wedge. Okay, this is a wedge. Okay, and I believe that's a pattern you have. If you actually have the trapping patterns, you have a wedge. Okay, you have a wedge, and this is a engulfing candle, but it didn't really close below, but it is enough because it's an engulfing candle that shift the zones. Which zones were shifted? You can see now everybody who executed in this box is literally trapped. And here what actually made this more reliable for me was this pin. Okay, I told you pins don't become pins, they are actually engulfing candles going up. Look at the story that was created, the illusion that was created. I told you they always give an illusion. Okay, because this is a zero-sum game. For one to sell, somebody has to buy. For one to lose, somebody has to win. Okay, so look at here, this was portrayed as a strong support. Okay, people believe this was a strong support. As you can see, bounce, 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 it bounced 3 times. Then they give a first engulf, they give a very big engulf as well. Okay, but this engulf actually closed as a pin. Hence why I always say I wait for the equity time to close, or I wait for 3 seconds. When 3 seconds is left for the candle to close, sorry, I said the equity time, I wait for the candle to close, or else I wait until there is 3 seconds. When there is 3 seconds, I know if they're gonna pull back, they might pull back like this, still it's gonna be an engulf. Okay, but on this one they gave a very big engulf, so there were people who chased this engulf. Okay, chase this engulf. There are people who chase this engulf. So literally there are people whose order got fulfilled all the way above here, because those who actually bought when the candle was here, their orders got literally fulfilled above. We know the difference between the asking and the bidding price. Okay, we know that. Okay, so I don't have to draw this in a very perfect manner, because we all understand what was actually transpiring here. Okay, so yes, I took this candle here. Okay, I took this candle here. Look at the EMA, it's inside the EMA, it's inside the EMA. Okay, it's inside the EMA, and of course my stops were literally somewhere here. Okay, okay, my stops were literally somewhere here. This was roughly 15 pips. Okay, but I am willing to keep them 10 to 25 pips. So this was a very, very good entry. However, it came and knocked me out with spreads from this candle. Okay, so yes, this was a loss, but again it was a very, very good trade, and it was taken as I do on any other trade. Okay, so this was a loss on this day. It was good actually. Okay, so I told you I execute, I wait after an hour. When I come back, I was closed down here, up here. Okay, and then it kept giving the same thing. Okay, kept giving the very same kind of thing, and this was literally trapping people up, breaking down, trapping people up, breaking down, trapping people up, breaking down, and it was literally not releasing anybody who is trapped above here. Because let's just look at it, those who executed and were trapped in this green box were not released by these guys over here. The same applied. Okay, the same applied here. So on this day it was a loss. Let's just proceed to Wednesday. Okay, I go to a 15 or 5 minute time frame to identify trap volume. So guys, as I said, if you take an entry somewhere here and you take a loss, it's on you. Why? Because I'm not in the market until here. Okay, so yes, we have traders trapped above the closing price. This is where they went before breaking up. So literally everybody who's here is literally trapped, and we know that if we're gonna be taking a trade back into trap volume, we don't want to hold all the way inside to this box. Why? Because they are mostly not gonna release these guys. Okay, yes, sometimes they will, but most of the time they ain't gonna release them. Okay, so I will go to a 1 minute time frame. Okay, I will go to a 1 minute time frame. Yes, and the equity is opened. Okay, the equity is open. Okay, the equity is opened. Yes, now we are waiting for trap volume in the session, and we are using the same patterns. Now let's identify the trapping patterns. I don't care about the wicks, you know that already. Okay, so this is a rectangle, and fascinating enough, they gave this kind of a rectangle, and I know there are people who fell for this one and got knocked out. Okay, but look at this, there was literally not enough trapping. There's not much trapping right here. Okay, and then I was with somebody when this happened, and I said no, I'm not taking this because there's not enough trap volume. Okay, there's not enough trap volume. That's why I always say go and back test. You'll understand what works and what tricks they throw. But if you don't want to go and put in the work, then you're not gonna know the tricks that they throw. You see, they give a nice explosive slope. I talked about this previously in one of my videos. This is an explosive slope. But look at something fascinating. Look at the EMA. Okay, look at the EMA. When this candle closed here, I know that people who took it, but the problem is we didn't have enough trapped volume. Okay, we didn't have enough trapped volume. They don't really create an illusion of a support or resistance. Okay, so when this one closed, now it's 3. You know what book says. When the level is hit 3 times, you know what book says. Okay, and they gave this engulfing candle. So this is the engulfing candle that shifted the zones. Why? Because literally everybody who went down here is literally trapped, as you can see. And when this candle closes, obviously those whose order got fulfilled here are in the most heat, and they are literally praying for prices to come back to break even, depending on their lot size and how much risk they've exposed themselves to. Okay, so this was a very good, or is a very good evidence candle. Again, for those who doubted this one because it hadn't broken out of the rectangle, this one was sufficient enough. So for me, it's not about the engulfing candle having to break out. No, it's all about it being an evidence candle. Why? Because you know that I'm actually riding on. Okay, I'm not guessing. Okay, I don't take anything down here. I want something that is already taken the direction where I'm gonna be going. Okay, because that's evidence enough. So whatever execution you took here, it's okay. For me, it was the first one. Okay, so as you can see, my take profit was hit by this candle. Okay, 50 pips was hit by this candle. So literally this is 50 pips in 29 minutes. I told you it's mostly gonna be less than 30 minutes. Okay, 29 minutes is less than 30 minutes. Again, for somebody who took it here, again it was hit here. So for those who are actually wondering how to add size or how to size into a trade that is running, okay, when you take an entry somewhere here, let me show you. When you take an entry somewhere here, maybe you executed this engulfing candle. Look at the EMA. This candle is already inside the EMA and it's already going, and we have trap volume down here. Okay, so when you execute here, they will do this. Okay, you add more size when this engulfing close. You don't wait for them to pull back and say, okay, I'm adding in when you are in a negative. No, when this engulfing candle closes, you are in positive. So that's when you size in. Okay, that's how you size in. So this one was very good because take profit was hit in roughly 29 minutes. Okay, and I don't care how many pips they're gonna go up. Why? Because I told you already, we have trap volume all the way up here. So I'm trading with caution because I don't want to go back into this box. Sometimes they will release them, sometimes they won't, but we never have a problem with 50 pips. This is for those who are actually willing to hold more. You don't want to be getting back into trap volume because you might just become that statistics. Okay, so that's something we are trying to avoid. So this one was a very beautiful one. Okay, let's go to our criteria. Did trapping during the session? Yes, we got trapping during the session in terms of or in the form of a rectangle. Okay, did we get our evidence candle? Wow, we got 2. Okay, we got 2 evidence candle. When this one closes, these people here are crying. Okay, so that's the main idea. And now we are going to Thursday. I'm almost done, and I'm gonna go to a bigger time frame as always, and I'm gonna try to identify trap volume. As you can see, prices went up and they ended up sending people down here, and that's where they consolidated. So this one wasn't that much clear, but we now know when the equity opens that, okay, people here are trapped. Why? Because the equity is opening here. Okay, the equity is opening here, not on this candle, on this one. I told you it's going to be the biggest one, and sometimes it's going to be a stop hunt. Even here it was a stop hunt. For people who bought this, it was just a stop hunt. Who sold this, it was just a stop hunt that caught everybody who sold this candle here. Hence why I always say, stay out of the first candle. Don't even try to stand in the way of the first candle. Okay, because it's gonna crush you. Mostly it's gonna be a stop hunt. Okay, so that's the main ideology. That's why we don't want to execute immediately. We want to wait for our criteria to be met. Okay, so these guys are trapped. Why? Because they went up, they came and sent people down, and then they exploded up. So by the time the equity opens, we can identify this ones here as trap volume. So what do? We go to a smaller time frame. Okay, now we are on a smaller time frame. Okay, now we have to identify what? Trap volume. Why? Because the session has already opened. Okay, the session is opened. Now we need to identify trade volume during the session. I told you. Okay, so let's look at this. This is the rectangle we get. Okay, this is the rectangle we get. We can actually see it started before the session even began. Okay, so this is the rectangle, because trapping volume is not supposed to be just I mean, the support and resistance is not supposed to be just a line. It could be an area. In actual fact, it is an area. Okay, but we use lines to make things easy for us. And as you can see, I don't care about the wicks or whatsoever. I want the bodies of the candle. Okay, that's what's most important to me. So as you can see, we didn't have enough trapping volume when they broke out here. Okay, this is not enough trapping volume. Why? Because they just went up and tapped here. Okay, yes, even if we are to pull it back to this side, as you can see, started here. Okay, yes, they went up, sending people up. They came and bounced here, created an illusion of a support and resistance. So here many people were believing in the support and resistance. So okay, it's fine. What do we have here? What do we have? It's not enough trapping for me, but I will draw another line here. Actually, this is now what we call a wedge. This is now a wedge. Okay, this is a wedge. As you can see, this is a wedge. They break out. And what made this interesting for me is this, guys. I love it when they give something like this. Okay, I love it when they give something like this, like a slope. They are sloping upwards. Okay, why? Because they are pulling everybody up, already. They've sent people up, stop hunted everybody who is going up, and now they are literally trying to do what? To send people up again. And there are people who believe them. So when they were doing this, all of a sudden they give a very nice engulfing candle. And I want you to look at something very interesting right here, right now. Look at the type of candle this is. Okay, look at the type of candle. What's the strength of this candle? I believe by now you know the strengths of the candle without even getting that book. Okay, you know now that there is no selling pressure down here. This is a Maribuzi candle. As you can see, we only have there's no buying pressure. We only have selling pressure here. So when this engulfing candle closes, we know that everybody went up, maybe, yeah, whose order got fulfilled here. I'm saying here because I'm also taking into account that there are people who fell for this move that was taking people up and executed. So everybody's order got fulfilled here. It could be anywhere inside this green box. Is literally hoping for prices to come back to break even, and more worse for everybody whose order got fulfilled above this blue line here. Okay, everybody who fell for these moves, okay, their orders are really in hope right now. So this is an evidence candle. The stop losses are very clear. They're just above here. Okay, let's calculate the stop losses on. That's why I love a 1 minute time frame. You see, it's only 23. I told you I'm willing to go to 25. Okay, I'm willing to go to 25. Here it's only roughly 23 pips. It's less than 25 pips, and the moment you enter, it explodes. Okay, so almost every day it's gonna explode. 50 pips got hit in 5 minutes. Okay, 5 minutes. And I'm gonna show you something interesting, something very interesting. Okay, as you look at this, you realize that, okay, this candle closed inside the EMA. Okay, and this is an evidence candle. Okay, this is an evidence candle. Okay, this is an evidence candle. As you see, it is an evidence candle after sloping. Oh, there are people who took this one, but it's a fine. Let them slope and break out of the slope. When you took this one, there was no slope. Okay, so you can't say this and that and that. Okay, but look at this. You see, on a 5 minute time frame, this is a very small piece of the pie. Okay, this is a very small piece of the pie. Okay, so you see, even on a 5 minute candle, people got the same entry, but by the time I got my entry, by the time it was confirmed on a 5 minute time frame, I was already done. But even for this ones, their take profit got hit quite quick. Okay, but I was already out of the market here. So just use any time frame that resonates well with you, a time frame that you understand, a time frame that you trust. Okay, it's all about you at the end of the day. It's not about the strategy, it's about you and what works for you personally. And if you go to a 15-minute time frame, you see this is a very small piece of the pie. This is nothing. That's why people say, but you are leaving a lot on the table. That's the goal. The goal is to get something guaranteed. The goal is to get something that will pay, okay? Not something where you are hoping, oh, I want to get 150 pips. You're hoping, waiting for 2 hours on your charts, hoping. No, that's not the goal. The goal is to take the smallest piece of a pie. It's going to look like you took nothing, whereas you know you took something. Why? Because here it's all about confidence, and this is the most important thing to understand. It's all about confidence, okay? This is all about confidence and experience. If you get used to taking 50 pips every time you see this, you take 50 pips, believe me, in a year or two you'll be taking double or 4 times the lot size you're taking now, okay? In 3 to 4 years, you're gonna be taking maybe 20 times the size you are taking now. Why? Because the account and experience as well as the confidence is growing. Important thing is the confidence. Once you gain confidence, you are gonna execute without fear, without doubts and stuff, okay? That is why today most people see people who are on their 20th year and they try to emulate them, okay? It's gonna be hard because those people can see entries when you can't see entries, and when they enter without fear or doubt. Why? Because they've already gone through 20 years of doing the same thing, okay? So the most important thing is experience, which brings more confidence. So tell me, in 5 years, remember, it's one thing each and every day. Yes, market conditions change sometime, but as you are backtesting, as you are taking the same thing, you will get to see, oh, now they're changing to this and this and this. It's gonna be simple. Besides, it's not gonna be much of a bigger change, okay? It's not gonna be much of a bigger change. They might just change the timings when the execution actually happens. And I also told you to pay close attention to the hours, okay? What time was this presented? 5. Look down here. It's the broker is behind in 2 hours, okay? So if you look down here, it's 15:05. So it's just not far from o'clock, okay? I will go back and try to show you the times. So you see, this happened almost after o'clock. Hence I said pay close attention to every half hour mark and every hour mark, okay? So this happened roughly 30 minutes after the session has opened, which was very perfect, okay? So pay close attention to times. That is just a giveaway in a way, just to confirm or just to help you understand when the opportunity might present, okay? So we need the smallest piece. Why? When we take the smallest piece with a bigger lot, we are gonna make more than somebody who waited for 1,000 pips. Yes, of course, sometimes it's gonna go 1,000 pips, but with a bigger lot size, taking 50 consistently, you're gonna make more than somebody who took 1,000 pips on the day. Because if you're taking a lot size of 20 or 30 and somebody took a lot size of maybe 0.1 and they got 1,000 pips, you find that you made much more than them, even though you got 50 pips, okay? So this is not a game of quantity, it's a game of quality. So we are trying to optimize quality over quantity. Hence we are focusing on a very small chunk, and that's why people will keep on saying, but you left a lot on the table. No, you left nothing on the table. It's a mindset. They want you to think in terms of quantity, and when you start thinking in terms of quantity, they are not going to give you the quantity required. You might see, okay, you are targeting 100 pips. You find that out of the whole week, they'll give it once. So you see, sometimes that means 4 times you open, they come and close you, or come and if you trail your stop to break even, they are coming and hitting those stops at break even, and that literally means like you made nothing, okay? So that's what they want you to think. Let's go to Friday without over explaining. So you can see the criteria are the same. Right now I want to show you something very interesting. You see on this broker, okay, by the time the opportunity, the engulfing candle that was presented is only this one, and by the time this one was created, let's look at the stops. They were roughly 29 pips. I'm not willing to risk that, but sometimes maybe I might, but I'm not, okay? And yes, they went roughly 40 pips in 27 minutes, but the opportunity was already gone. Hence why I said before, I don't want to be actually executing on a smaller device. I want all my monitors on one, because one thing I enjoy is I use different kind of brokers, and this is where it comes in handy, okay? You must understand that brokers are not going to give you the same prices. Brokers are not going to give you the same candles. Some brokers are going to be manipulative. Some brokers will hide pins like Exness. I know Exness does sometimes hide like easy entries. If it's a pin, if it's an engulf, they will try to manipulate. You'll find that, okay, for them it's 3 candles just to cover that pin, because they don't want I don't know. I believe they don't want to show you that this is an obvious entry, or they are manipulating whatsoever they are doing. So right now I'm going to bring in another broker, because you see here, the opportunity wasn't really given on Friday here on this broker. You see there was a very huge gap, okay, and you can't trade a gap, okay. So I'm bringing in another broker, and I believe this is a trick that if you start using, it's gonna work. You see, this is one March, and if you go back, you realize that this is also one March. Okay, so they were giving the same thing, but this broker gave a gap. This one did not give a gap. So this is an advantage of actually analyzing on different brokers. As I told you, analyze on MT4 and I execute on 5. Okay, I love MT and 4, okay, because of simplicity, and beside I'm used to it, so I can analyze on MTN4 and execute with my phone if I want to do that. Okay, so look at this. Same thing happens each and every day. So we are gonna try to find trap volume before the session. Okay, we can't really identify trap because they went up, then they bought people down, and when the session opened they are in the middle, so we can't really tell where volume is trapped. Okay, so we are gonna be trading with caution, because now we can't identify trap volume. But I told you, the inability to identify trap volume before the session is important, but we can also work around that. Okay, we can also work around it. Okay, so okay, we have a load that was made. Okay, we have a load that was made, but I don't really care much about the load that was made before, because for me, I don't want to know what happened before. I just want to see trap volume. But let's just bring this over here. Okay, this is straight here. So this is the load that was made throughout the day. As you can see, this was the load that was made throughout the day, and then the US session opened and went through straight, ran out the low. They ran out the low, so everybody who bought here is literally closed. Okay, but we don't care much about that. So, okay, we want to identify trap volume during the session itself. Okay, now they explode to the downside. We're doing nothing, we're not even executing, we're not even entering. Okay, we're just waiting and sitting on our hands. So they make this low. Yes, that's where we start drawing our lines to see what are they giving. Okay, as I've already said, wait for them, allow them, give them sufficient time to complete their patterns. Okay, this is the most important thing. Allow them to complete their patterns. Don't try to rush them. Okay, allow them, you're not moving the market. Okay, your job is to react. Okay, you react to whatever they did. You don't act before them, because I know that people want to act and I told you, catch. No, we are not acting, we are reacting to what they're giving. You see, they gave a W. This was not sufficient trapping for me. However, when they gave this pin, I now realized, you see how big it is. I now realize that there are many people who fell for this pin. Okay, there were news anyway. There were many people who fell for this pin, and some people thought that, okay, now they've given a pin. You know, people are obsessed with pins, right? So people sold when this candle closes. Why? Because this is a very, very big pin, and they believe these guys have completed their job. Okay, but less did they know that prices are still coming. So we just wait patiently, wait for them to see what are they gonna do. Okay, so now they are consolidating in a rectangle. Obviously, when this pin closes, we now realize that they are in a rectangle, hence why I don't like pins. Okay, because if you bring the line graph, you realize that, okay, we didn't have a pin, we only had a we only had a rectangle. As you can see, okay, we had no pin at all, because here are prices. Okay, so yes, that's why I really hate the pins. I don't care about the pins. Okay, because by the way, they manipulate a lot with the pins. And then they broke down. Okay, yes, they broke down. It wasn't a gulp, people chased it, but we are waiting for the easiest trade. And look at the EMA. Okay, and now they gave this engulf. I don't care about it. They gave an inside candle, and then this was the engulf that shifted the zone. Okay, if you don't trust this engulf, you can take the second one. It's still okay. Okay, it's still okay, no problem with that. Okay, but this was the candle that shifted the zone. Everybody who went down here, okay, is now relying on hope, praying for prices to at least come to break even, so that they might exit at a break even, more especially those whose order got fulfilled on this black line or below it. Okay, so that's one thing we have to understand. So you see, we are back inside the EMA. Oh, this is wonderful. And now that's where we enter. Our stops are just above this candle, which is roughly 21 pips. Okay, which is good. And then let's go to our 50 pips. 50 pips got hit in roughly it's roughly 7 minutes because it was tapped by this candle here. So 50 was hit in roughly 7 minutes, even before we closed out of this. Okay, so we are out. I told you I'm in, and then I close, come back after an hour. And then obviously one of the extreme is gonna be hit. So you saw the whole week there was only one loss. So see how beautiful it was. Even that loss wasn't like a loss where they went against us immediately. It's just that my stops, I enjoy keeping my stops so tight, okay, because these are explosive, and the main idea is once you enter, you're not gonna see drawdown. Okay, they're gonna explode right away because we have trap volume, and 50 pips shouldn't be a hassle. Why? Because these are indices. So you can see in 7 minutes it's hit. So I believe in three, the profits were hit in roughly less than 10 minutes, and it's only one that went to an extent of roughly 28 minutes to 29 minutes. Okay, so you see how clean this is. It happens each and every day, and once you get used to this, it's just rinse and repeat. Do the same thing every day. When everybody's complaining that this is difficult, you just sit down and ask yourself what is difficult, because you are doing one thing each and every day. Okay, but if you're still jumping from strategy to strategy, this one is working, somebody comes with another one, this one is working, and now you want to learn the new one, then you're gonna give up something that's already working and try to learn something from scratch. You're just gonna go around circles. Okay, so this is a full strategy, guys. This is a very full strategy. You can just go and back test it, replicate it. It happens almost every single day. And I only went through US 30. I didn't even go through Nasdaq. Okay, I didn't even go through S&P 500. Okay, it's only US 30, because you can see the video is already too long and I was explaining a lot of things. So guys, I believe from now onwards you're not gonna complain, you're not gonna say this is hard, you're not gonna see this as challenging. Do the same thing each and every day. Go back to the advantages of having one strategy. So guys, I appreciate you. It was long. Yes, it was meant to be long, because this is a whole strategy. It's not like, okay, these are trend lines, teaching people how to draw clean trend lines. That will be roughly 5 minutes, but this one is a whole strategy. You just copy and paste it. Okay, so I believe, guys, yeah, I think, yeah, we've gone through this, and yeah, I hope you all understand. Thank you, guys.